primarily I will be focusing on, as you mentioned, the financing mechanisms, models, and looking at the trends in energy and infrastructure sector, focusing on specifically the private financing aspect of it. Before actually, I also have some data to present, but before getting into that, you just look into some of the policy measures that are being brought by the government to attract private investments, private financing in energy and infrastructure sector. Then we'll also look a little into two major programs, one is the National Infrastructure Pipeline and the other is the National Monetization Pipeline. And specifically from the private projects, PPPs and private investment. And then also going a little deeper into energy projects within the infrastructure pipeline. And we'll see a little data about the mapping of private financing trends in India in these two sectors in last 5-7 years. And we'll talk a little about the one of the major financing mechanism that is coming up and is attracting a lot of focus is the infrastructure investment trusts within the power sector. So we'll talk a little about that. So if we see in the past 3-4 years, we've seen a lot of activity within the infrastructure and energy sector from the government side. We have in the last couple of years a new development finance institution formed by the government with a 20,000 crore capital investment and a portfolio of looking at a portfolio of 5 lakh crores in the next 3 years. This is important because the DFI model was sort of abandoned in the early 2000s in favor of commercial bank financing for infrastructure projects. But I think the NPA problem has shown that we need to go back, and this is one of the major policy decisions that has come up. Following up on that announcement, the National Bank for Financing Infrastructure Development was formed through the Parliament Bill in March 2021. Then we see the announcement of the National Infrastructure Pipeline, which now combines all the infrastructure projects together under one portal of the Government of India, all the sectors. And it's an ambitious project for 5 years, 111 lakh crores. As of now, very recent data, it has listed more than 9,000 projects under NIP. Then following up with the same policy of national programs, came up the National Monetization Pipeline. So monetization pipeline is supposed to feed into the infrastructure pipeline. The money raised through monetization will be invested into new projects, infrastructure projects. It has around 20 asset classes of infrastructure projects, and they're supposed to raise money through that. If you look at the assets under the NMP which are going to be monetized, we have roads, railways, power. These are the top three. And the other important policy direction that we see is the focus is on attracting foreign investment through private equity funds, sovereign wealth funds, and pension funds. And these are one of the major announcements again in the budget. Announcing 100% tax exemption from for income from the infrastructure projects to these funds. And then we come to the formation and the promotion of infrastructure investment trust and the real estate investment trusts. So these are the major, I think, policy prescriptions that we are seeing that are coming up from the government side. If we go a little deep into the National Infrastructure Pipeline, it covers all the, as I said, all the major sectors: transport, water, sanitation, social infrastructure, logistics, energy, tourism. the portal that the Government of India has, indiainvestmentgrid.gov.in, it has around 18,000 projects, and out of that, 9,000 are NIP projects. Just looking at the kind of categories these projects have. So, more than 10,000 projects are EPC projects, and PPPs are a fraction, and purely private are minuscule of the overall project data that we have. The share of the financing that we see from these projects, and in principle that's shown by the government, is 39 and 40% coming from the central and the state government, and 21% coming from the private financing. A quick look at how these percentages are divided. So budgetary resources are of course there. Extra budgetary resources are also important, especially in sectors like railways and ports. And then the innovative financing like PPPs and InvITs. Similarly, if you look at the national monetization pipeline, the target is 6 lakh crores over a period of 4 years. Almost 5.5% of the investment from NMP will go into NIP, the money raised from that. And so the proposed outlay is somewhere around 43 lakh crores. This year, we have not been able to find the disaggregated data, but this year it's around, the target was around 80,000 crores. The government has achieved around 96,000 crores from the monetization pipeline. These are some of the sectors which are supposed to, from which the assets are supposed to be monetized. This is some, in principle, the kind of money, the revenue will come from some of these sectors. Power is 39,000 crores. Generation, transmission is 45,000 crores. Railways is 1,52,000 crores. So some of these figures are available, but we don't know the real-time kind of situation in terms of monetization. If we look into the energy projects under the NIP, there are around 1,300 projects worth $393 billion. And again, the EPC, the number of EPC projects is much higher than the PPP and purely private projects. The subsectors included under the electricity sector is generation, which includes renewable and non-renewable both, transmission, distribution, and oil and gas. This is a quick look about specifically the projects under generation, distribution, transmission projects under NIP. And again, we see the total number of EPC projects is much higher than the private and the PPP projects. This is some data that we collected last year. There was a report that we released on private financing into infrastructure and energy projects, looking at a range of companies, funds, sectors where the financing is coming in. So these are the kind of funds that we looked into: sovereign wealth funds, real estate investment trust funds, private equity funds, infrastructure investment trusts, pension funds, infrastructure funds, and the others. So we see that a lot of money is coming from the sovereign wealth funds, and especially from the Gulf and the Western countries. A little data about where the money actually is going. So we see a lot of money is going into financial intermediaries who on-lend it to other kind of projects in infrastructure and energy. And also a lot of money is going into digital, but this is skewed because a lot of money went into Reliance Jio. So this is why this is a little skewed here. country-wise, if we see, so a lot of money is coming from Saudi Arabia, Canada, Abu Dhabi, US, Singapore. These are the major ones where a lot of external funds are coming from. We also looked into what kind of companies are investing into these kind of projects. So specifically Saudi Arabia's public investment fund, the oil company, companies like Brookfield, GIC, Blackstone, KKR. These are the major companies which are investing into these projects. So as I said, Brookfield is there, but this is more into, if you look more into the renewable energy, we see a lot of these companies investing funds into renewable energy projects as well. Before I conclude, finally, the infrastructure investment trusts are also becoming an important kind of mechanism to bring in money for energy and infrastructure projects. We are seeing a lot of trusts being registered, and they are allowing the financial institutional investors, banks, insurance companies to put money into these investment trusts. And FPIs are also being permitted to invest into these InvITs. Some of the major ones that we see here is which are registered on the SEBI's website: Anzen, India Grid Trust, Versant, Renewable Energy Trust, Power Grid Infrastructure Investment Trust. So Power Grid is basically has assets in transmission. Versant has assets in renewables. Similarly, the others. So this is what we are seeing in terms of InvITs, which are becoming a mechanism to bring in money into these projects.